What's ahead for jobs growth, wages growth and the unemployment figures? That's one of the things Dr. Andrew Wilson and I discussed today, as well as construction costs and how they're going to impact property values in the future. And we're going to have a chat about what the auction markets are showing about buyer and seller confidence. If you want to keep up to date with our property markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. While some employers are still struggling to fill vacancies, the latest data hints that the COVID-related jobs boom may be coming to an end. Australia's official unemployment figure remained at 3.5%, but there were only about 900 extra jobs created in September. So what's ahead for our unemployment rate and for jobs growth and wages growth? That's one of the questions I plan to ask Dr. Andrew Wilson, Chief Economist of My Housing Market. I'm also keen to hear what the latest stats show about construction costs, because clearly these are going to have an impact in the future on the cost of new properties and, in fact, the established house prices. So, hello, Andrew.
Yeah, good day, Michael. And yes, we have had those latest unemployment numbers. And I think as we've probably discussed recently, there is that sense that we may have reached the bottom of the growth cycle in our labour market, but really nothing to get too worried about with the latest numbers as well. And there are a number of factors that are sort of pointing to the bottom of that remarkable growth cycle we've had, particularly in the post-COVID period.
Andrew, 3.5% is a great unemployment rate, but can we dig into it a bit further and understand what's really going on with participation rate and how are the various states performing?
3.5% is a fabulous result. Again, it's the same result that we had over August. Of course, it's just pipped up by 0.1% from the remarkable July results, 3.4%. A little bit of that is a fall in the participation rate, but all the factors there are pointing, all the data is pointing to a stabilisation of the cycle. Unemployment rate steady, but nonetheless at that near record low level for the monthly surveys. Jobs growth just up by 900 jobs over the month, so flattish result. And also the participation rate was flat over the month as well. But I think you're looking to the future, certainly, and perhaps what's happening, we're seeing the result now, is that particularly open borders are providing us with a whole new raft of labour to be able to soak up that demand that we have clearly in our economy. Even though the latest migration numbers are the March quarter from the ABS, that did show almost a surprisingly sharp turnaround over the March quarter compared to December now that borders are open. And I think we're now starting to see, in terms of the labour market data, the impact of that sharp turnaround in migration on the numbers. And of course, that'll continue to work its way through. There's no doubt that closing borders have been a significant factor in the sharp fall in the unemployment rate. When we do compare the labour force over the period prior to COVID, and then we look at the same period when COVID hit us in March 2020, we can see that the growth in the labour force is significantly lower. And all in all, we're seeing, some hundreds of thousands of fewer numbers in the workforce when we compare those two periods. And of course, that's just a result of not having migrant workers. And now we do have those migrant workers. We'll see the workforce grow, and we're starting to see signs of that already with the latest data, the workforce rising, and that'll mean more choices for employers and more competition amongst employees. So we shouldn't be surprised if we do start to see that unemployment number start to tick up, but it's coming from a very, very low base. And as yet, really, Michael, we haven't seen any indication that higher interest rates are impacting the economy as well.
These 200,000 odd migrants, they're going to find jobs because, in particular, we're looking for people coming in who are going to be in the healthcare industry, the aged care industry, childcare, things like that. But they've also got to find homes, Andrew, and that's one of the big challenges. And it's also a challenge for people looking for new jobs interstate, and in particular in regional areas that are having such challenges with vacancy rates being historically low.
That's the other end, of course. We can probably, we need the extra demand in our economy or the extra workforce in numbers in our economy because we're short of workers at the moment. That's given us that very low unemployment rate and that very high participation rate. Of course, the high participation rate reflects those in the workforce, perhaps that wouldn't have been part of the workforce, but were retired or self-employed, but given all the opportunities around, they've moved into the workforce. Certainly the other end to improving the demand and supply position in the labour market, we're probably only going to worsen the undersupply of property in our housing markets, Michael. And as you said, low vacancy rates, skyrocketing rents, migrants, not just those that are coming here with full-time residency, but those that are coming in with student visas as well. And we're seeing a lift in the number of international students coming into Australia again, and typically they will look, particularly in the first instance, to being tenants and inner city tenants. And I think that's again going to exacerbate the undersupply of rental properties that we have just about everywhere in Australia. It's like you can't have it all, can you? It's swings and roundabouts.
What about wages, Andrew? We know that real wages, in other words, after inflation, have actually been falling, and our Treasurer is hinting that's going to have to happen for a couple of years. But it's unlikely, with a whole lot of new people coming into the labour pool, that wages are going to rise quickly, is it?
More competition for jobs means less capacity to push up wages as a result of that competition. I think at the end of the day, Michael, that's actually a good thing in our challenge in terms of inflation.
Yes.
At the end of the day, that'll mean, and we certainly can now start to speculate, that interest rates will peak lower and sooner than many have predicted. I think part of that is that we haven't had the runaway wages situation that's occurring in Great Britain and the US, and clearly contributing to their inflation rate being significantly higher than ours. And of course, their interest rates, particularly the US interest rates, are significantly higher than ours and likely to continue to go higher. And given their problems with inflation, not really looking like they're easing in the shorter term, at least.
Now, Andrew, anyone who's been wanting to renovate a home or build a new home or buy a new property would recognise that house building costs have risen dramatically over the COVID-related period. What's happening now? Because I know that my housing market runs a national home building cost index.
Our monthly index for August, Michael, has shown a bit of a disappointing result in terms of trying to ease those skyrocketing building costs. Of course, the energy behind what we've seen record growth in house building costs over the past year was the previous government's home builder policy, which really was, in a sense, oversubscribed, very popular policy, but it created that surge in demand, which supply was unable to match. Of course, we've had a terrible shortage of building, house building, particularly, of course, because they were the main beneficiary of that policy. But we've seen a chronic shortage of building materials and building labour for houses, and that's resulted in skyrocketing building costs. We run a monthly building cost index, which is derived from ABS statistics, and we did see an easing in the annual growth of building costs, or the index ease, over June and July. But unfortunately, the August numbers showed another tick up, in fact, a significant reversal in building costs. So we've still got some way to go before we actually ease the growth. And of course, we're talking about the growth in building costs here, which is important when we're speaking about inflation, house building costs, because that's has been an important ingredient of our higher inflation model. But when we look at the annual growth rate, it is now below its peak. The peak annual growth rate was back in April of 24.3%, which is quite extraordinary that building costs increased over that period. So annual cost increases aren't as high, and we're talking house building costs here, of course, but still high at 18% over the year to August. When we look at the capital city breakdowns in terms of growth in house building costs over the past year, we can see that Perth and Brisbane led the charge in terms of higher building costs for houses over the past year. But when we look at the relative position between capital cities in terms of which capital has the highest building costs, we can see that Sydney, when we base Sydney at 100, is well ahead of all the capital city markets. And unfortunately, we're yet to see the absorption, which we should be seeing an impact of all those building approvals from last year's home builder policy. We're not seeing a really consistent change in house building costs, which we had been speculating may be occurring a couple of months ago, but now we're back to rising costs.
Well, as for houses, medium and high density building costs have shot up even more. And I think this means that it's not necessarily viable currently to build new homes because the
Yes.
market won't pay for them just because it costs more. And it's definitely not viable for a lot of those apartment towers that are on the drawing board to be built until the value of dwellings is going to increase. And so I guess that's just going to put extra pressure on our rental markets and on our housing markets, Andrew.
Absolutely, Michael. And that's the point, isn't it? That it's sort of Murphy's Law that it all happens at once. Now we've got high construction costs, residential construction costs reducing already an undersupplied market. And maybe that then buyers will be gravitating more to the established market, which is certainly starting to show consistent signs of revival now over the past month or so.
Well, you're talking about consistent signs of revival. The auction results give us a good indication of how the market feels. And our auction markets were tested with more listings,
Yes.
especially in Melbourne
Yes.
before the religious holiday that we're about to experience, Cup Weekend. And the buyers were out there, weren't they?
Yes, a good result there in Melbourne, Michael, absolutely. And it was Super Saturday, of course. One of the biggest auction days of the year is that the weekend before the Melbourne Cup long weekend holiday. Numbers were pretty good, over 1,000 auctions, and that's the highest number we've seen since June. So it was a real test for a market that's really been quite resilient through the winter period, and certainly clearance rates have been rising over the past month or so in Melbourne, but Melbourne's really been, in a sense, the great survivor during the winter period. So this was a big test, biggest numbers since June. The Melbourne market really cleared that test quite comfortably with another mid-60s clearance rate, just below the 66.7%, which was the highest since May. That was recorded a couple of weekends ago. So very good result there. It shows the appetite for property from Melbourne buyers is still reasonable. We know that auction clearance rates are sort of in the neutral zone between 65 and 70%. That's when it's a reasonably even battle between buyers and sellers. But certainly on trend, we could start to expect to get closer to that 70% over the remaining couple of months of the spring selling season. The Melbourne market will move into pause mode next weekend when, as you said, the religious holiday of the Melbourne Cup weekend is upon us. Other markets also performed reasonably well. Sydney has had a strong revival over the last month or so. Its clearance rate was down marginally, but still held at 65%, Michael, which again, as I said, is sort of in that neutral zone, a little lower than the previous weekend. The auction numbers in Sydney really haven't shown any sign of a significant revival. These numbers are still quite reasonable for the spring season, but we would be looking for higher numbers of auctions coming through in Sydney. So a little bit of a question mark there, but certainly their clearance rates are holding in the mid 60%. Brisbane picked up on the weekend with a higher clearance rate and higher listings. Adelaide, the same amount of listings, but as we've been expecting in Adelaide, another 80% plus clearance rate. Quite a strong market there, of course, auction market in Adelaide. And Canberra is slowly but surely moving into revival mode. It was sort of last to come to the adjustment process we've gone through this year following the boom of last year. So it's, it will be the last to enter that revival period, and it looks like that's happening now. So really still quite positive results from our auction markets at the weekend. And given the circumstances of high auction numbers in Melbourne, again, it's clear that our auction markets are really shrugging off a lot of the negativity that we've had and the higher interest rates, and getting on with business and really moving into some quite reasonable results, all things considered. I think that getting back to our original discussion, this is clearly a reflection of a very strong economy with that near record low unemployment rate, and buyers and sellers just getting on with their lives.
Well, over the week, there's going to be a budget. There's going to be the latest inflation
Yes.
figures. So it'll be interesting to see how consumers handle that, because it's really got to do with consumer confidence
Yes.
and their view of what's going to happen with their financial futures if they're going to make that big decision about buying a home. So I look forward to catching up with you next week, and we can unpack those bits of news.
Yeah, interesting times, Michael. Thank you.
Thank you.